Howdy, Jacob here. Today we're going to do a more in-depth analysis on Chegg. So just a reminder, I plan on going over the numbers to remind everybody about the business, and then I will go over some of the notes that I took from reading quarterly reports, 10Qs, 10 most recent 10K, and then re-put in new assumptions based on my analysis. And again, everything I say will be of my opinion. Do what you want with it. Love me, hate me. Don't really care. Just don't do anything because of what I do. Please do your own analysis. If you like what I say, great. If not, also great. Don't really care. So I hope you enjoy the video, and let's remind ourselves about the business a little bit. So Chegg is a direct-to-student learning platform that helps learners build essential life and job skills to accelerate their path from learning programs in the U.S. and internationally. Subscription-based service. Growth has been pretty solid over the last 10 years, but has been declining over the last 2 years. They did get a huge spur of growth from COVID as students were staying at home and probably cheating on exams. Hopefully not, but probably. Return on invested capital is pretty bad because they're reinvesting so much back into themselves. We see their free cash flow is quite a bit higher and has been positive for a while now. They have been issuing quite a bit more shares through stock-based compensation, though, and recently bought back a lot of shares, but we'll look at their balance sheet to see that they have $357 million in short-term debt, $243 million long-term debt. They've dwindled that debt down quite substantially, but to have $350 million short-term debt on less than $350 million in cash-like products means that they're going to really have to refinance that very quickly, but I did point that out in my notes. So let's look at some of the notes I took. So over here I have Basu is an acquisition. I guess I don't know why I didn't put, I have it out there. Acquired by Chegg in 2022 for 385 million euros. They're competing with they're like a Duolingo, a Babbel, and they're an AI-powered speaking practice. The Chegg regular platform, their original platform, is main competitors are Course Hero, Quizlet, Khan Academy, and DataCamp. New restructuring plan made on June 17th, 2024. In the most recent report that I saw, they plan on reducing headcount by 23% to dedicate resources to international growth with initial target of 6 countries. They plan on a new branding and marketing strategy and simplifying systems and processes. They're expected to save 40 to 50 million in 2025 with free cash flow estimates of $100 million. 7.7 million in subscription services, down 5% from 2022, still representing 89% of revenue. If debt cannot be paid in cash, Chegg may settle by diluting shares or by defaulting. That's just to say, I saw they have a lot of short-term debt. I'm going to get into what it is, what it looks like, when's it due, what's going to happen, what their plans are. But, if it does get late enough, I was researching, what was it? EBS, I believe. EBIX, that's what it was, EBIX. And they had a bunch of short-term debt and turned out ugly for them. So, you never want debt to really become due. I mean, obviously, you either want to refinance or pay it down and be debt free, figure your stuff out. And if you refinance, just realize that, at some point you're going to have to allocate capital for that purchase. But that's just a quick statement. Do what you want with it. Subscription service revenue down 5% year over year, as stated. Their other is down 20%. Total net revenue down 7%, and cost of revenue jumped 14%. So not a lot of great stuff here. We literally saw expenses go up. The money they received went down. Obviously, that's going to really hurt your bottom line, and it did. Their cash equivalent is $580 million, down 55% year over year. Senior notes are $600 million, down 50% year over year. So they have been paying down a lot of debt. They've extinguished $506 million of debt, and they've also extinguished $335 million in share repurchases. So we see over here that shares have gone down from 141 million outstanding in 2021 to 117 million outstanding in 2023. So repurchased quite a bit of shares, down 18% year over year. Capital allocation looks a little wonky because there was a huge net sell-off of assets, but there's negative 139% in investments, 193% increase, or 193% of their 3-year free cash flow. Share repurchases, again, I said it sounds wonky because they sold off assets. 83% to acquisition, 24% to debt reduction. This is going to be their capital allocation with the free cash flow, which you can reinvest, make acquisitions, buy back shares, pay down debt. What did I say? Pay a dividend. That's the 5th one. So they don't have a dividend, but their other 4 forms of capital allocation were paid out as that. Convertible senior notes is their debt. $243 million for 2026, $357 million for 2025. Their 2026 notes are convertible at $107.55 per share, and 2025 notes at $51.56 per share. 26 notes convertible on June 1st, 2026, and mature 1 quarter later. Their 2025 notes are convertible on December 15, 2024, and mature 1 quarter later. 26 notes bear interest at 0%, 2025 notes at 0.125%. So this is one of the advantages of those convertible senior notes, is that you can get them for very cheap. If your shares go down, then that's actually beneficial for you as the debt holder, but it's still $357 million due in 2025 that they're going to have to figure out. And so it's one thing you're really going to have to figure out if you want to invest in this company, because I do think that personally it's a very cheap business in comparison to the free cash flow I think they're going to make. But this is just one of the biggest offings that I don't know is going to happen. And it could, mess with my valuation quite a lot if they either issue a bunch of shares or have to sell off something to fund this debt that's due extraordinarily shortly. So that's just a thing. Even it's what I say, like, our balance sheet isn't what we actually incorporate into this. We have to take our balance sheet into consideration from the standpoint of, do we have enough margin of safety? And your margin of safety is going to be different than my margin of safety. That's different than whoever. We're all in different parts of life. So, from a free cash flow standpoint, something may make sense, but from a debt situation, you might just not be comfortable with it, and you're just going to ixnay it. That's totally fine, 100%. You don't have to invest in every stock. I'm throwing pitches. You got no strikes. Come on. So their next earnings report is August 5th. That's when we get more information, which is the day it's the day after I'm doing this. And so I will be looking at that report to see what they do with their debt. Share repurchases I guess it's today. Yeah, I got to look at that. Share repurchase program. They bought back quite a bit of shares, as we saw in 2024 right here, 13 million, kind of crazy. 10 million in 2022 Q1. Not so much, or I didn't see anything in 24 Q2, which I haven't seen yet. That's why. So share repurchases and my new assumptions, I'm assuming 0, because again, I don't know what to do with this debt. I think they can still grow at 3%. They're finding ways to reinvest and grow. And so I think they'll be able to do that. I think their margins will be kind of dampened from that. And I think that they won't deserve as big of a PE from it. With a 20% return and these assumptions, we're saying that it's a buy right now. So this is definitely something I'd want to do more research on. And again, this in-depth analysis isn't the most in-depth analysis I'm going to do. I need to review other companies and their competitors. I need to see what this debt is doing. I need to figure that out. They need to say what they're going to do, and they need to follow through on it for me to fully invest in them. I can't invest in something that I'm scared about the debt. Even if it's the best valuation I've ever seen, if I'm concerned about the debt can take rid of every possible margin I think I have. So I'm going to have to figure all that stuff out first. But for me right now, I do think that it's an attractive enough price to look at. And so I do hope, share your ideas if you want. I'll definitely post. So I hope you enjoy the video and have a great rest of your day. Thanks.